So it's international public sector accounting standards, financial reporting, intermediate level. International public sector accounting standards, of course, we are abbreviating these as who? As IPSAS. Now, the key word that we need to underscore here is the word public sector, public. So I'm in the process of trying to differentiate between public sector, and private sector. Before I even introduce what IPSAS are, it will be very important for us to really be able to distinguish between these two segments. So the first one that I would want you to look at is the accounting standards. Which accounting standards do we use in the public sector? Public sector accounting standards are the IPSAS. So these are the IPSAS, International Public Sector Accounting Standards. How about private sector? Private sector, ladies and gentlemen, companies which are in private sector normally use what we call IFRS. IFRS to prepare financial statements. To prepare financial statements, they normally use what we call IFRS. IFRS stands for what here? International Financial Reporting Standards. Standards which are normally used by those companies which are in the private sector. It's either they make use of IFRS, or rather they make use of IFRS and IAS. IFRS and IAS. IAS stands for what? International Accounting Standards. As you are aware, international accounting standards were the old standards, which gradually are being phased out with IFRS. But the most important thing for us in this particular class is to appreciate that the private sector standards, the private sector for financial reporting, we normally use IFRS and what here? IAS, where I've been able to tell you the full meaning of IFRS and IAS. Very important, ladies and gentlemen. How about the difference between the two sectors in the name of objective? What is the major objective of private sector? Private sector objective, of course, ladies and gentlemen, in the private, like we are in the private sector, RCM College. We are in the private sector. Our major objective here is to make profit. So profit maximization. Profit maximization. Profit maximization is our major objective. Never be cheated by anybody. Any company which is in the private sector normally has got one major goal, which is to maximize what here? Profit. How about public sector? Public sector, ladies and gentlemen, these guys are purely out there to offer, their main objective is to offer services to citizens. And that is why in the public sector, they always talk about the government, the financiers, getting what we call value for what here? For money. Value for money. That is why a body corporate, like for example, Kenyatta National Hospital, even if they were to make losses every year in, every year out, there is no way Kenyatta National Hospital can be closed. Why? Because of value for money. The value really here is to offer service. So long as you're able to offer good service, then that is akin to the government making their profit now. So basically government here, which basically, public sector is more of government. So government does not have what here? Any profit motive. Of course, we know that there are those like parastatals, like what we call government businesses. But majorly, government is never out there to make what here? To make profit. So ladies and gentlemen, from there we go to the third difference. Who are the owners? Who owns? Ownership. Who owns, in this case here, the private sector, the owners of the private sector? We call them, who, ladies and gentlemen? We call them investors. We call these guys here investors. We call them investors. We call them investors. We call them investors, or who? Shareholders. 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 How about public sector government entities? Nyinyi ndio mna own public entities. Nyinyi ndio mna own public entities. So, ladies and gentlemen, the public entities basically are owned by who? They're owned by citizens. wananchi. Wanasema wananchi ndio wenye inchi, citizens. Of course, in this case here, citizens, as much as you're saying that we are the owners, we can't run to KRA, for example, a government body, and then you sit down there saying that, you know what, now today I'm making myself a director. No, there is our agency. So in this case here, we have our agency. The agency is the government. Agency is the government. These are our agents. These are our agents. Agency is the government, like that. Great. Are we together up to there? Are we together up to there? Are we together up to here? Are we together up to here? Are we together? Are we together up to here? Are we together? I'm trying to look at your comments. Are we together up to here? Victoria says yes. Victoria says yes. What about the other students? Are we together? Are we together? Are we together? Are we together? Nafsa says yes, at last. Nafsa came in. Very good. And then now we have the funding. Thank you very much. We have the funding. Funding. Who finances, ladies and gentlemen, who finances in this case here? The private sector. The private sector is financed by the owners. The owners, the shareholders. The shareholders. The shareholders. The same case in this case here with the public sector. Public sector is also financed by who? By the owners, by the citizens, by the citizens, by the citizens, through, in this case here, are the taxes we pay. Citizens, through the taxes we do what here? We pay. Citizens, through the taxes we pay. Right? Remember, both also rely on borrowings. Both. You will get, in this case here, government agencies borrowing heavily from the local and international market. The same case with private agencies like EABL. You always get them borrowing locally and what here? Internationally. Locally and internationally. Right? Right? I think with these differences, you are okay. Now we can move to something different. Basically, for those of you who have just joined us, we are looking at what we call IPSAS. IPSAS are international public sector accounting standards, standards that we use to do accounting, financial reporting in parastatals, basically government bodies, and NGOs. NGOs, ladies and gentlemen, are not out there to make profits. NGOs also, like the UN World Food Program, my famous IGAD, African Union, they normally use what we call IPSAS. They normally use what we call the famous IPSAS. The famous IPSAS. Now, the first thing that you need to understand is this. Initially, all those bodies that I've just mentioned here never used IPSAS. They were using what we call cash basis of accounting. Cash basis of accounting. Is there anybody who works for the government or a government body? Anybody who works for government or a government body here? I'll not ask you a tough question. I just want to know whether there is anybody who works for government or a government body. Could be government business, a parastatal. You simply say Y for yes. Mecha says yes. So I don't know, Mecha, whether the organization you're working for, have you adopted IPSAS? Have you adopted IPSAS? Have you adopted IPSAS? I want to believe yes. I want to believe yes. Okay. 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 You know, bodies like, for example, Kenya Power, you know, Kenya Power is a government entity, but it has what? It has a profit motive. So long as you are looking for profit, even if you are a government entity, then you shall report using what we call IFRS. You shall report using IFRS. But if you are there, like most of these hospitals, Mbagathi, Mama Lucy, they are not after anybody's profit. Then in this case here, they must report what we call, they must report under what we call the IPSAS. IPSAS. And the IPSAS, ladies and gentlemen, even before I talk about IPSAS, initially this, like Mama Lucy, they used to call, to use what they were using, what they call the cash accounting. Listen, and the cash accounting, like now we are RCM here. RCM, in most cases, we have our students paying our fees in the form of installments. So then what we shall do, if, for example, we have a student A, B, C, D, they have made promises to pay us. What we shall do under the accrual model, even if you haven't paid our fees, even if you not end up paying our fees, us from our side will count it as what he has earned. So assuming that this year we have earned 12 million, right? But at the end of the day, some students, of course, will be able to run away. At the end of the day, we shall be paid something like 10 million. 10 million. So 12 million versus what here? Somebody 10 million. Now, listen and listen to me very well. If, for example, a company is using cash accounting, they'll only account for revenues over how much? What they were paid, the cash they received. They'll only account for 10 million. But for a company which now is using IPSAS, what we call the full IPSAS. Full IPSAS talks about accrual, that a transaction cannot go to the financial statements if, or rather listen and listen to me very well, that these transactions, even if, ladies and gentlemen, you have not been paid for them, like here, I've not been able to receive the 2 million extra here. So long as I earned that money and accrue, I must accrue the figure right and put it in the financial statement. You know, initially, ladies and gentlemen, government bodies used to use this concept of cash basis to hide liabilities. How was that happening? Because under cash basis, if, for example, you ask for some supplies, people deliver those supplies, and you tell them, I'll be paying you this money in February next year. So long as you haven't paid for those supplies, you can't take that particular figure and say it's a payable and throw it in the statement of financial position. No, it's cash basis. It's cash in, cash out. That is the concept we are using. So many body corporates, government entities here sat down internationally and said, hey, this cash accounting is not transparent. We can't see through. Some transactions are being hidden. Somebody can use this cash basis, cash in, cash out, to hide some money, right? Where they have sold some, for example, goods, right? So they hide that money so that when that money, this 2 million excess, when it comes later, it goes to other people's pockets. They said, no, it cannot be like this throughout. We must change. So when they sat down like that, they were able to coin what we call the International Public Sector Accounting Standards. And the International Public Sector Accounting Standards, once you adopt them fully, then accrual is the biggest language under IPSAS. You must accrue. So when somebody brings in the supplies, even if you have not paid them, it's a liability that you accrue at the end of the year. Simply come and say, by the end of the year, I was owing so and so. So I would want you to put this down for me. And this is quite popular in your exams. If you look at your past papers, this is quite popular. I would want you to mention there benefits of IPSAS. Benefits of IPSAS. Mention there benefits of IPSAS. Benefits of IPSAS. Number one, it improves reliability, or rather they improve, there are many. They improve reliability of financial statements. Improves reliability of financial statements. Remember, most of these government agencies, normally they depend on donors. For donors to give them money, they must evaluate their financial statements. And we are saying that these donors can only rely and say that these financial statements here look truthful if these particular bodies used IPSAS to prepare the financial statements. So it improves, they improve reliability. Mention number 2, ladies and gentlemen, they are very fast, that they improve accountability and transparency. They improve accountability and transparency. They improve accountability and transparency. Remember, the main reason why we are doing our accounts is to ensure, ladies and gentlemen, that somebody, whenever there is a mistake across the chain, somebody should be able to take their responsibility, right? So anybody who uses this IPSAS, especially because of the accrual thing, right? We shall be able to know that there is some 2 million here that was not collected, and who is responsible for this money, who is going to chase. So when we are using this IPSAS because of this accrual thing, the responsibility really comes in, the accountability comes in, and of course the transparency, being able to see through the financial statements is a major thing. There is no way you'll be able to hide things. Number 3, they improve consistency of results. Consistency of results. Consistency of results, I would want you to put in brackets there. Comparability. Comparability. You can compare statements of Kenya Power, statements of KenGen, because all of them have been used, or rather have used the same language. So we have the concept of what here? Comparability. Comparability. They help in decision making. They help in decision making. They help in decision making. They help in decision making, yes. You will be able, ladies and gentlemen, to say that these liabilities are quite increasing. We shall not be able to order these and this next year, right? Right? So, ladies and gentlemen, those are enough advantages for us. Those are enough advantages which should make you guys consider what year adopting IPSAS, especially the concept of comparability. When investors come from the US who are used to investing in companies over there which are following IPSAS, when they come to Kenya again and get companies following IPSAS, it makes quite easy for them to make what decisions. Because they'll be able to compare organizations and say, hey, this is quite small, we don't want this. This is quite small. So anything that has got advantages has disadvantages. Like this mwalimu here knows how to teach quite a lot, yes. But because of that, my biggest disadvantage is that I may miss classes, right? Everything that has advantages must be having disadvantages. So could you kindly write for me there the drawbacks, the challenges, the disadvantages of IPSAS. Disadvantages of IPSAS. The first disadvantage I would want you to put there is costly. 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 I'm the one who did the IPSAS for this body called IGAD. I was their consultant, IGAD, Intergovernmental Authority on Development, which is a smaller version of African Union based in Djibouti, which is next to Ethiopia, quite a good country, right? Right. And the processes that we went through to be able to come up, ladies and gentlemen, with IPSAS for IGAD were very rigorous and very expensive. You can imagine bringing in consultants, in this case here from various parts of the world, to come and converge at Djibouti, right? First of all, develop a framework for them, right? And show in this case here that their books of accounts now are in line with the IPSAS. So there are a lot of trainings to be done to the employees, etc. So it's a costly thing. It's not easy to adopt IPSAS. Of course, that goes hand in hand with number 2, time consuming. Time consuming. You know, it's an overhaul of your financial reporting. All your systems, including the SAN systems they were using, they have to change to a different system because IPSAS, I mean, it's quite a different thing. It's quite a different thing. Right? Right? Number 3 is the knowledge gaps. Knowledge gaps. Not very many people have really invested in this thing over IPSAS. Like in the government here, people are sleeping. IPSAS is a major thing that has come up, but I'm not seeing anybody coming to my class asking to be taught what here, IPSAS. People don't want to invest in this. So the knowledge gaps, lack of technical skills, right? The other thing that stands on our way towards full achievement of IPSAS by our local institutions here is number 4. Number 4, local standards. Local standards. Local standards. Local standards. If you go to Sweden, like the company I work for is a Swedish company. This company, where it's based there in Sweden, they have their local accounting standards. I should have put their local accounting standards. These local accounting standards are a major impediment into internalization, having something that is international, internationalization. Because everybody, and remember these countries, actually you already get some books putting this as a separate point, although it's supposed to come there into bracket, that these countries are sovereign. They are sovereign. Sovereign means what? Independent, zinajitawala zenyewe. So zikiamua zimeamua. Like you guys must have heard of USA. USA has refused to adopt IFRS. They are making use of the US GAAP. So what is the IFRS doing? IFRS, the IASB body, is so seriously trying to realign itself to US GAAP. If you look at, for example, IFRS 17, it is borrowed word by word from the US GAAP. Of course, they must be having permission from the US International Accounting setting body, right? Right. So the local accounting standards automatically will bring in a very big impediment towards really us going forward with international public sector accounting standards. Language barriers, language barriers, language barriers, language barriers, ladies and gentlemen. If you want to have, right, accounting standards which are international is going to become a major issue. Why? Because it's going to become quite difficult. Like now, China has told their people not to learn English, right? So then that will be again a major block in terms of what here, international comparisons. You can't do comparisons of entities which are in different what here countries. Are we together up to there, ladies and gentlemen? Are we together? Are we together up to there? Are we together up to there? Are we together? Are we together? Are we together? Are we together? Please be fast in making replies. Are we together? Are we together? Are we together? Thank you very much. Now we go straight away to what we call IPSAS 1, International Public Sector Accounting Standard 1, IPSAS 1. And please, it's important that you guys get to understand these public sector accounting standards, because I would want most of you, if not all of you, to work for government. The government has really improved their salary structure, and yet the work over there is quite nicely structured as compared to some of the jobs which are in the private sector. Are you aware that currently you can get an accountant in government who gets 350,000, 350,000? Are you aware of that? Are you aware of that? Paul is saying no. Things have really changed in government. Things have really changed in government. So it is one area that you guys really, you would, even 350,000 is quite small. Ask Major here. Major will tell you he must be having friends of his who are earning up there a lot of money, who are working for government. Major unanyamaza sana. Ukweli Major ama uongo? Major, ukweli ama uongo? Major ameamua kunyamaza. Major ameamua kunyamaza. You'll be surprised. They are slowing. No. Government, you are joking, my friend. Government, some of the bodies in government are adopting even most current accounting reporting tools. They are not slow. The government of 20 years ago when I used to be young and the current government, things are really changing. Things are really changing. Don't be cheated by anybody. Just give it a trial. Give it a trial. We're not talking of county governments which are still young. No. But even some counties, I mean, when you look at, because I travel quite a lot and I do some few things here and there for some few counties here and there, you will go to a county, get how they have structured their accountants, payables accountant. You realize that these guys are putting in systems. So even counties, I'm so sure the next cycle, next 10 years, these guys will be very, very far. Will be very, very far. Great. So now mention there IPSAS 1. Under IPSAS 1, I would want us to do a past paper question. I would want us to do a past paper question. It's May 2015. I hope you have your past papers. Even if you don't have past papers, I'll be able to project this question. Must be somewhere here. Just a moment, let me just download this again. Share on WhatsApp. So please let me know whether you are able to see my screen. Kindly let me know whether you are able to see my screen. Respond very first. Are you able to see my screen? 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 Yes. Thank you very much. Thank you very much. So this is this question which came from the pilot paper, September 2015. September 2015, question number 5, boy. September 2015, question number 5, boy. The following information was extracted from the books of Ministry of Tourism for the financial or fiscal year ended 30th June 2015. They want us to give them the statement of financial performance for the year ended 30th June 2015. And then we have the statement of financial position as at 30th June 2015. Remember, under IPSAS 1, we must prepare a statement of financial performance, SFP, and a statement of financial position. A statement of financial performance is what you call income statement under the private sector. And of course, statement of financial position across the board, that is our balance sheet, our balance sheet. So if I get this kind of a question, ladies and gentlemen, what do I need to do? The one thing that I'll be forced to remember is that, number one, when I'm doing the statement of financial position, I normally use the accounting equation. Accounting equation tells us that assets equals what? Who is able to remember the accounting equation? Assets equals who? Who is able to remind us the accounting equation? Assets equals who? Somebody remind me. Assets equals who? Somebody remind me the accounting equation. You guys are not moving as fast as I would want you to. Equals equity plus liabilities. Equity plus liabilities. Thank you very much. Liability plus equity, the same. Thank you very much. But now you see, in government, we do not have equity. In government, if I were you, I would have written this as early as yesterday. In government, we normally say, instead of equity, we normally talk about accumulated fund. So accumulated fund is the same as equity. Accumulated fund is what we shall be using as what here? As our equity, because in government, equity is accumulated fund. So then if that is the case, ladies and gentlemen, then what do we have here? Then what we have here are these items, which will be like our trial balance. So this trial balance, I need to map it out first before I start posting anything. So this trial balance, so the accumulated fund, if you are following, where do I take it? Do I take it to the balance sheet or financial performance statement? If you're following, accumulated fund, where should I take accumulated fund? Somebody. Accumulated fund, where should I take it? Because it's an equity, straight away that goes to the statement of financial position. So you write in brackets, statement of financial position, which is the same as our balance sheet. I'm trying to map out this thing. How about cash and cash equivalents? Where are we going to take this cash and cash equivalents? Please talk to me. I would want to hear you. Now I'm here. I would want somebody to classify this for me. Remember, these items could either go to the statement of financial performance, which is our income statement, or a statement of financial position. Could you kindly talk to me? Where do you think shall we take cash and cash equivalent? Somebody. Cash and cash equivalent? Where do we take it? Cash and cash equivalent? Is it a balance sheet item? 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 Yes, financial position. Thank you very much. Financial position. Thank you very much. Thank you very much. So I hope you have written there position. How about receivables? Receivables will automatically go to position, not performance. Inventory will go to statement of financial position. How about transfers from the exchequer? Transfers from the exchequer. Remember, exchequer is the government's wallet. The government's wallet is what we call the exchequer. Exchequer. Out of this exchequer, all the government monies must be banked in the exchequer account, and it is the same exchequer that disburses. So in this case here, we have received something from exchequer. So this cannot go to. Aldrin, you can't see me because I'm projecting this to really do what here to be able to explain to you, right? So we have here transfers from the exchequer. This is a financial performance item. Financial performance item. I'm trying to map out. From there now we have the next one, which is fees, fines, and licenses. Who issues licenses? It is the government. When they give you a license as a business, what do? You have to pay them money. So this is an income. And if it's an income, I will take this money to the statement of financial performance. Somebody please try to talk to me. How about the next one, liability for long-term benefits? Why should I take liability for long-term benefits? Where should I take liability for long-term benefits? Please, if you want to benefit maximum layout of Zoom, try to be aggressive in Zoom in terms of giving us, even if they are wrong. What shall I do to you? What shall your colleagues do to you? Just be active. Liability for long-term benefits. Where do you think in this case here shall we take this? Do we take it to the statement of financial performance or the statement of financial position? Please, how I wish I had 16 answers, including myself. I should be able to respond. How I wish I had so many. How I wish I had so many answers. How I wish two are very few. Financial position, thank you very much. FP, financial position, thank you very much. Position, thank you very much. The same case with this long-term borrowing, isn't it? Long-term borrowing will go straight away to financial position. I like the next one, finance cost. Where do we take finance cost? Is it performance or position? Is it performance or position? Please concentrate 100% here and ensure that you are giving us answers. Ensure that you're giving us answers. Ensure that you're giving us answers. Finance cost, these are the same as interest. Where do we put them? 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 Where do we put this? I'm not seeing my students. Only 4. I cannot accept this. I can't accept this. You see, like last semester, we produced the best student, right? Lady accountant, the best student combined section 5 and 6. I invited that lady to come and speak to the section 5 students that I have last week on Friday. No, not last week. This week on Friday. And one thing that this lady spoke about, which was very true, Mary Njoroge told colleagues that if you want to survive very well, make sure that you are very active in Zoom. Don't wait for answers from others. Type there. Give us something. Finance cost, this is an expense. It has to go to the performance. Let me see what they said. Thank you very much. Performance. Please don't write SP. You know, both of them are SP. Both of them are SP. Statement of financial performance. Right. Statement of financial position. Right. So performance. Thank you very much. This one, we can even bet they'll not be able to get this right. Supplies and consumables used. If you want one touch passing, just concentrate here. Consumables, supplies and consumables used, performance or position. We start by mapping. We start by mapping. I can see 2 students and they're very consistent, those 2 students. They're very consistent, those students. The students are not seeing here totally. How I wish, as I change my battery here, I could get like 16 people having tried. It's just about trying. You don't have to get it right. Even if you get it wrong, so what? Even if you get it wrong, so long as you've tried. That is the most important thing. So long as you do what? So long as you try. So long as you try. That is all that we are asking for. Okay, 7, thank you very much. There's quite a big improvement. But because these are consumables, these are expenses, performance. Thank you very much, Mweni. Thank you very much. Remember now we are talking of Ministry of Tourism. So you must think the helicopter way. Thank you very much. So what do you think of wages and salaries? I'll be able to summarize this very fast. Wages, these are yearly expenses. So they have to go to performance. Other expenses, performance. This one, they'll not be able to get it right. Please talk to me. Transfers from other ministries. Where do I take transfers from other ministries? Somebody talk to me. Where do I take transfers from other ministries? Where do I take transfers from other ministries? First of all, what are they? Remember, these ministries keep on exchanging money. Right? So they've gotten money from other ministries. Performance, thank you very much. It's a receipt. Remember, statement of financial performance is all about receipts and what here? Payments. And then we have transfer to other ministries. What about transfer to other ministries? Who is able to run away with this ball? Transfer to other ministries. Where do we have it going? Performance. Thank you very much. The next one is a tough one, and I'm not seeing men talking. The next one is computer equipment. Computer equipment, where shall it go? Position or performance? Please, don't expect everybody to give me the answer. Don't write FP, please. If you write FP, both of them are FPs. Position. Thank you very much. How about vehicle, or rather, computer equipment are what? These are assets. The same case with vehicles, they are assets. Land and buildings, they are assets. They'll go to position. How about revenue from exchange transactions? How about revenue from exchange transactions? Revenue from exchange transactions. Should that, because the word revenue is there, it has to be performance. Thank you very much. Other revenue, of course, performance. These two, payables and reserves. Payables and reserves, where do we take them? Payables and reserves, where do we take them? Payables and reserves, where do we take them? Payables and reserves. Payables and reserves, where do we take them? Payables and reserves, where do we take them? Thank you very much. Position, thank you very much. And now once you have been able to map like that, now your work becomes very easy. Your work becomes very easy. Accountants who are working for government, actually I normally tell them when I go to any trainings there, I normally tell them they're idle because there is really nothing hard to account in government. So we start with, because we must talk of ministry, title has to be there, of tourism, right? Statement of financial performance. Financial performance for period ended, for period ending, they must give us the period really. For period ending, I think they mentioned there 30th June. 30th when? They must be having a period here. They must be having a period here. So for the period ending 30th June 2015. Period ending 30th June 2015, like that. So remember, our work is very easy. We shall come and have receipts. Receipts versus what here? Payments. So cash in, payment is cash out. And then now you go to your map. I hope you remember your map. I hope you remember your map. I hope you remember your map. So you look for the items of statement of financial performance. The first one, of course, is position, is not performance. Even the second one is position. Even the third one is position. Inventory, this position. Transfers from exchequer, 1875,000. So transfers from the exchequer, should I put that under receipts or under payments? Of course, you had mapped. You had mapped. Is it a cash inflow or a cash outflow? Remember, receipt is cash in. This is cash out. Major is saying receipt. How comes there's only one student really? Suzy, thank you very much. Even if you are wrong, but at least you see, transfers from means that you are receiving the money. Money is coming from other. From other. It's coming, it's a cash in. Suzy, are you able to see it's a cash in? Are you able to see it's a receipt, Suzy? Susan, yeah, thank you very much. So transfers from other ministries. Yeah, it's paid from the exchequer, right? Transfer from exchequer. So the exchequer, remember that central government. Transfer from exchequer, it's a cash in, 1875,000, like that. Now you'll be able to slot them very fast. Like myself, I can't take more than 5 minutes with this thing because now you know I have already mapped this out. So I'll go to fees, fines, and licenses without fearing. Of course, we had said that this one is a financial performance. It is this financial performance. But now where should I put this? Under receipts or payments? Please be yourself and talk to me. Be yourself and talk to me. Be yourself without fearing anybody. Without fearing anybody, should I put it under payments or receipts? Thank you very much. Thank you very much. Thank you very much. This is quite confusing. Now, Mweni and Aldrin. Aha, Mweni and Aldrin. City Council. For example, kuna siku walikuwa wameanza mambo mbaya mbaya sana. Hata ukipatikana umetema mate chini, wanakuchukua. Ukipatikana umeangusha karatasi chini, wanakuchukua. Unaona? Government doesn't pay for their licenses easily, trust you me. Government's main work is to give people out there, right, licenses for those people out there to operate, permits, etc. So we are giving out licenses and then we receive money. We receive money. So don't look at it like the government is being fined. It will be very hard for the government to be fined. Right? Right? So if you look at this very well, they are calling it, you can easily know, fees. Who receives these fees? Fines. And like this must be the government. So the government receiving. So that has to be a receipt. Fees, fines, and a license, 375,000. 375,000. So Aldrin, are we in agreement regarding this, or have forced you people to write it there? Oh, Mweni, thank you very much. We're in agreement. In agreement. Thank you very much. Thank you very much. That is the kind of class I want, where we argue. We are not, if I know that we are here just to copy, I would rather be making videos for you. I would rather be making videos for you and then sending, which will be very bad, right? Now, the next one, of course, we had mapped liability. We said liability is for their position. Finance cost, the interest. Where should I put the interest under performance? Is it under receipts or payment? Thank you. Great. Because you know, it's government that borrowed. Now they're required here. They borrowed from Chinese government. Now they're required to pay. It's finance cost. So finance cost is a payment. Mention their finance cost. How much? It is 75,000. Finance cost is 75,000. Now, ladies and gentlemen, after that, what else? After that, we have supplies and the consumables used. We expense them. 300,000. So I'm expensing this because I used. So we have supplies and the consumables. Anything used can never go to the statement of financial position. Supplies and consumables. And the consumables used 300,000. 300,000. 300,000. 300,000. So supplies and consumables use 300,000. Then we have wages and the salaries. So wages and salaries, of course, this will be affecting my financial performance. But where? Under payments or receipts? Payments or receipts? It goes without saying. It is the government paying their workers. So in this case here, we have wages and salaries, payment. Wages and salaries. So wages and salaries, what do we have? Wages and salaries, they have given us a figure. Wages and salaries, they have given us a figure. Wages and salaries, 750,000. And ensure that we get our figures right, please, and ensure that we get our figures right so that our position, financial position, will be able to balance. After that, the next one is other expenses. Other expenses, 900,000. That one I should not even ask you a question about it. I know it will be a payment. Other expenses, 900,000. 900,000. Then we go on to the next one. The next one, ladies and gentlemen, here is called the transfers from other ministries. Could you kindly talk to me as regards transfers from other ministries? Please talk to me. Please talk to me. Please talk to me. I can see something coming in. I can see something coming in from other ministries. We are receiving, we receive it. Transfers from other ministries. Just like how a good goalkeeper, like the goalkeeper in this case here of Arsenal team, isn't it? And you simply catch the ball. It's a receipt. It's a receipt. Right? So transfer from other ministries. Thank you, Isaiah. Yeah, we call them receipts. Thank you very much. Great. So in this case here, how much? How much is this? Transfers from other ministries. Please, you guys are younger enough. If I lose out on a figure, 37,500. 37,500. And then now also in the period, our president asked us to make some transfers to other ministries. So we have here transfer to other ministry. It goes without saying that this 375,000 is a cash outflow. Transfer to other ministries. Transfer to other ministries. 375,000. It's a payment. Thank you very much, Isaiah. You've just joined us and I like your vigor. From there, we have computer equipment. Of course, we said computer equipment, this cannot really go to performance. This is something that will be outstanding at the end of the year. It has to go to the statement of financial position. So we have land and buildings. Revenue from exchange transactions. Revenue from exchange transactions, where do I take this really? Revenue from exchange transaction. Revenue from exchange transaction. It's a receipt, isn't it? So revenue from exchange transaction. Revenue from exchange transaction. Thank you very much. So revenue from exchange transaction, what are we getting here? It is 75,000. 75,000. 75,000. 75,000. Now, I would want to make myself clear. IPSAS, initially, like UN, they used to get a lot of money. Like IGAD, where I did some consultancy about this IPSAS, they used to get a lot of money from their member countries and the friends of IGAD, the donors, basically. So they used to lump everything together under receipts. And then IPSAS knew, no, there is something wrong there. For transparency, would want to even encourage these particular organizations also to work hard. You can't just say that you are UN, that the whole year you don't work at all as UN. You're only waiting for donations. So we say that automatically revenue should be divided into two. Even if it's zero in the category, just show 00. So as such, we have revenue, which will be getting from exchange transactions, revenue that will be getting from exchange transactions, and then we have revenue from non-exchange, IPSAS 9 and IPSAS 23. Revenue from non-exchange, I'll start with revenue from non-exchange. Revenue from non-exchange, these are basically the donations we are getting. Donations we are getting. The fines we are imposing on people out there. They give us money. So they have given us money, and yet we haven't offered any service in return. That will be called revenue from non-exchange. Listen, for example, ladies and gentlemen, Kenya government, during Corona period, we got a lot of revenues from Friends of Kenya. And these revenues here were coming straight to our exchequer without any conditions. We are simply extending our love to Kenya. So there is nothing that really Kenya is doing for us in return. then that revenue will be accounted for under what we call what here? Revenue from non-exchange. There is nothing that Kenya gave them. We got just a HELB. And then, for example, we have these exchange transactions. If you go to the UN today, these guys do a lot of research, and out of the research, they do a lot of publications. Those publications they are able to sell. So when they sell, somebody can come and say, I bought this from the UN, I helped them. You never helped them, you got something in exchange. You gave them money in exchange for whatever you bought. So that automatically becomes what we call revenue from who? Revenue from an exchange transaction. Like I remember some time back before insecurity issues struck us, so many people could go to the UN grounds and hire them for weddings, for good meetings. They even had meeting rooms. Well, they closed all that because of what insecurity. Nowadays, to get into UN as an outsider, it's quite a very difficult, it's a big process, not that easy, right? So ladies and gentlemen, that automatically, you know, they have given you a service. You've hired their ground. So whatever money they get out of whatever service, whatever goods they sell to the public, then that will be accounted for under what I will be teaching you later called IPSAS 9, revenue from exchange transactions. So then we're going to have two-line items here. We'll talk of revenue from exchange, and then we have what we call revenue from non-exchange transactions. So could you kindly give me an example? Could you kindly give me an example of revenue from exchange transactions in government? In government, who can give me a very good example of revenue from, because I know these are things you're going to get when you'll be employed at the hospital, right? Revenue from exchange. So like if I could continue before you, because you must give me one. You must give me one item there. You must give me an item there from exchange. Imagine like in Kenya here, license will fall under non-exchange. Because fine, these guys give you permit. What do they give you in return really when you give them that money? Yes, like sale of jet fuel from KPC to Airways. Yes, that is automatically revenue from exchange. I like that. Look at KEMSA. KEMSA, of course, ladies and gentlemen, they do quite a lot of donations. But trust you me, there are categories of drugs that they do what they say. They sell. So KEMSA gets their own donations, and they're also selling what here? Drugs. Right? Like royalties, yes. Royalties, yes. Yes, you're given something. In this case, you're told go under, like what they do at the communications, Ministry of Communications, yes. When they give you, like, for example, the waves, right? They give you like a line, channel of communication, right? Then that is okay. There is something they're selling to you. There is one guy here who gave a very bad example, please. Another guy here, I think that guy is a madman. I don't even need to give you that example. It's not an example that should come from me. Revenue from exchange. Now, ladies and gentlemen, here we are. Then we have other revenue that I'll be able to pick this for 50,000. So other revenue here. So other revenue is how much? Other revenue, ladies and gentlemen, here, other revenue is 450,000. 450,000. Other revenue is 450,000. So could you kindly do me a favor? Please give me the total receipts. Give me the total receipts. Kindly give me the total receipts. Give me the total receipts. Kindly give me the total receipts. Total receipts here. Somebody total receipts will be equal to who? M. Total receipts. M stands for what, Paul? Or 2.4 million. Total receipts according to Paul. According to Paul, we have 2.4. So I'm waiting for someone else to confirm that 2.4 million. I'm waiting for somebody to confirm that 2.4 million, 2.4 million, 2.4 million. Can somebody confirm that for me? Thank you very much, Paul, for coming in as a first. 2.4 million. Who else can confirm for me this figure? 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 $28,12,500. So Z is saying, this 28 has been confirmed. 28,12,500. 28,12,500. That has been confirmed. So could you kindly go and take away these figures that are in brackets, the cash outflows? Please subtract for you to give me a surplus or a deficit. Please subtract for you to be able to give me a surplus. I've done it before. It's supposed to be a surplus. A surplus of how much? A surplus of how much? It's supposed to be a surplus. All of us must participate. It is this minus this minus this minus this minus this. Give me the total. Surplus of how much? $412,500. Can somebody confirm the $412,500? $412,500. Thank you very much. Thank you very much. So please, we shall use this figure in our balance sheet and ensure that you will be able to remember it when we go to our statement of financial performance. And our statement of financial position. Can I rub this? Can I rub it? Can I rub it? Can I rub this? Can I rub this? Thank you. So then we have here again, Ministry of Tourism, but now this time round, statement of financial what year position? Statement of financial position. As at, we don't talk of period ending, as at. So we have here as at. And then straight away, of course, ladies and gentlemen, if it is a financial position, we normally start with assets. And assets, we have non-current assets. Non-current assets. We have the current liabilities. We have the equity, but we don't talk of equity here. Here we talk about what here? Accumulated fund. Accumulated fund. For government, we don't use equity. Accumulated fund. And then we have liabilities, which are divided into two. So we have the non-current. And then lastly, we have the current. Please make sure you are leaving some spaces in between. Make sure that you are leaving some spaces in between. Myself, I'm not able to leave as much because of my camera. Because of my camera. Okay. So again, we go back to our question. So our question, ladies and gentlemen, what do we have here? Remember, we had already done the mapping. The students who have just come in, they are disadvantaged a little bit. We already have the mapping. So in this case here, we have accumulated fund. This we said is a straight away statement of financial position. So we have here accumulated funds brought forward. So accumulated fund brought forward is 562, 500. Great. We go to the second one. The second one, ladies and gentlemen, mine is quite an easy task, really. Mine is quite an easy task. So the next one is cash and cash equivalents. Where should I put cash and cash equivalents, my good students? Where should I put cash and cash equivalents, my students? Where should I put cash and cash equivalents, my students? Where should I put cash and cash equivalents? I'm waiting to hear from you. I'm waiting to hear from you. Yes, current assets. Thank you very much. Current assets, cash and the cash equivalents. And not liabilities, sorry. No. There is a problem here. It's supposed to be non-current assets, current assets. Sorry for that. Because liabilities will go to the next section. So we have cash and the cash equivalents. And the cash equivalent, cash and cash equivalent over how much? Cash and cash equivalent over how much? Cash and cash equivalent over 375,000. Thank you very much. 375,000. Thank you very much. No, liabilities will come down here. Liabilities will come down in and current liabilities and then current liabilities like that. Thank you. You're almost there. We are almost there. We are almost there. So, ladies and gentlemen, after that, we shall be able to go to the next thing, which is in receivable. Where do I take receivables? Where do I take receivables? Very fast, very fast. Now you guys are keyboard warriors. Receivables, where do I take receivables? Of course, I know it's statement of financial position, but where exactly? In the statement of financial position, where exactly? Where exactly? Where exactly? Where exactly? Where exactly? Receivables. They are not talking receivables. Current assets, thank you very much. Current assets. So receivables, 150,000. Current assets, receivables. So here, receivables. We have 150,000. After that, ladies and gentlemen, the next one is talking of inventory of consumables. Again, current assets, inventory of consumables. They were existing at the end of the period. So those are current assets, inventory of consumables. So inventory of consumables. How much is this inventory? 75,000. I love this. 75,000. I love this. From there, ladies and gentlemen, after inventory, we have the next one. After that, we have the next one. The next item is called transfers. Of course, we captured them in the statement of financial performance. Fees and whatever, we captured. Liability for long-term benefits. So where do I take this liability for long-term benefits over, I think, 150,000? Where do I take this liability for long-term benefits? Liability for long-term. Samoy already has something there for me. Victoria the same. I'm feeling nice. I'm feeling like dancing because my students are making my work very easy. They're telling me, ladies and gentlemen, that long-term liability, this has to come under non-current liability. So we have here long-term liability for benefits will come there. How much? $150,000. Thank you very much. 150,000. Thank you very much. 150,000. Thank you very much. Now, after that, ladies and gentlemen, do we have any other thing? Oh, yes. We have long-term borrowing. How about this long-term borrowing of 750,000? Where do I take the long-term borrowing? Where do I take the long-term borrowing? Long-term borrowing, where do I take it? Again, on current. Thank you very much. So we have here long-term borrowing. Long-term borrowing over how much? Thank you very much. Long-term borrowing over how much? Long-term borrowing, yes. Long-term borrowing of 750,000. Thank you very much. 750,000 long-term borrowing of 750,000. Thank you. We're almost there. We're almost there. Thank you very much, Victoria. We're almost there. So from there, we have finance cost. Of course, we took that to the statement of financial performance. Supplies and consumables, the same. Wages and salaries, we took them somewhere. Transfers from, transfers. I can see some assets existing there. Computer equipment and asset. Where should I put computer equipment? Under current assets or non-current assets? Computer equipment, computer equipment. We know, ladies and gentlemen, that computers can give a service for more than 1 year. For more than 1 year. So automatically, that is what you're non-current. Any asset which can give you service for more than a year, that is non-current. So we have here, you can mention there computer. So computer equipment, computer equipment. So computer equipment. So computer equipment, what do we have here? Computer equipment. Thank you very much. You guys are even volunteering to give me values. 200,000. I'll actually be picking your figures now. Computer equipment, somebody is telling me it is 200,000. Thank you very much. So the next one, again, I can see is an asset. An asset. So this asset is called vehicles. So vehicles, of course, those are what are non-current. So we have vehicles. Vehicles are non-current. So vehicles, what do we have? How much for vehicles? Somebody for vehicles, 175,000. Thank you very much. From there, ladies and gentlemen, we pick on the next one. The next one, what do we have? The next one, what do we have here? We have land and buildings, land and buildings. So land and buildings, of course, those are non-current assets. So we have here land and buildings, land and buildings. How much for land and buildings? 25,000. 25,000. Thank you very much. Thank you very much. So the next one after land and buildings, the next one is called revenue. Of course, that is not ours. We have other revenue, not ours. Then we have payables. So payables, what do we have here? Where do I take payables? Where do I take payables? Where do I take payables? Thank you very much, Victoria. Payables are what here? Current liabilities. Under current liabilities. So under current liabilities, come and give us payables. Payables over how much? Payables over how much? Payables over how much? Payables over how much? 375,000. Payables of 375,000. Payables of 375,000. From there we have, thank you very much. From there we have, ladies and gentlemen, the last one. Reserves, yes. So where do we take the reserves? Where do we take the reserves? Where do we take the reserves? Reserves. Thank you very much. A reserve is an equity component. In government, you don't talk of equity. It is accumulated fund. Thank you very much. You should not even continue with this class. You guys are geniuses. So come and give us here reserves. Reserves. Reserves over how much? Reserves over how much? Reserves over how much? 1,350,000. 1,350,000. Is there any other thing that you guys feel that you have left out, which will be very important here? Any other thing that you feel we have left out, but yet very important here? Very good. From performance. Mweni nasema, tulisema kweni same, surplus. So where do I take the surplus for the year? Where do we take surplus for the year? Where do we take surplus for the year? Under the accumulated fund, you'll come and tell us the surplus for the year. By the way, had you done this topic, I could be wasting your time. Had you done this topic with Mr. Kyoko? You seem to be no, or you did in section 1. Oh, okay. Okay. You seem to be knowing it so much. You seem to be knowing it so much. Or you guys work for government? Do you work for government? Most of you. Most of you, do you work for government? You have seen a few yeses, okay. So surplus for the year. Surplus for the year. So surplus for the year, please remind me the figure. Surplus for the year, please remind me the figure. Surplus for the year, remind me the figure. Surplus for the year, remind me the figure. 412,500. 412,500. So assuming that we have everything with us, please come and give me the total assets. Give me the total assets. And then some other students to come and add for us to give us the total accumulated fund and liabilities. Total accumulated fund and liabilities. Total accumulated fund and liabilities. Somebody should add this. Give us a figure. We're adding everything. Total assets, I'm being given a figure of 3.6 million. 3.6 million. 3.6 million. 3.6 million. How about the total accumulated? Total accumulated. Total accumulated. Is it 3.36 or 3.6 million? Please check again. 3.6 million. So somebody, please confirm. Please confirm. Please confirm that the final answer is balancing at 3.6 million. So could you kindly do me a favor? Could you kindly do me a favor? In Zoom, there is a place where you can clap for yourselves. Where you can clap for yourselves. So I would want, in this case here, somebody to clap for themselves, and I would also want to do that. We must know how to appreciate ourselves. We must know how. There's a place called reactions there. There's a place called reactions there. You must know how to appreciate yourself when this thing balances. You simply say, I like this. I like this. You even stand up a little bit, right? I said clap, and now here I am touching love. I'm also another one. It should have been a clap. Should have been a clap. Should have been a clap. Right? Like that. Like that. Many people haven't even clapped for themselves. They don't know how to appreciate themselves. Right? We must appreciate ourselves. We must appreciate ourselves. Great. Thank you very much. Thank you very much. Thank you very much. Now, ladies and gentlemen, we shall take a small break of 3 minutes, and then we come back. 3 minutes. This is 15:31, so 15:34. So if whatever we got, I'm explaining again, if we got whatever we got here was a deficit on the other side, then the deficit automatically would have been subtracted from here. Thank you very much. Now, ladies and gentlemen, that takes me to IPSAS 24, which is very popular with your examiner. IPSAS 24 talks about budget, budget outturns, budget outturn, budget outturn. And for us to be able to appreciate how budgets are done in government, I would want us to look at December 2013. December 2013, I'm so sure you don't have this question. I'm so sure you don't have it. Do you have it? Do you have it? December 2013. December 2013, do you have it? Do you have it? I've sent something on your WhatsApp. I've sent something on your WhatsApp. Please tell me when you are able to see it. Tell me when you are able to see it. Have you been able to see it? Have you been able to see it? The other option will be for me to see whether I could fetch it from my email and share it here. It's not yet come. Give me 1 minute. I see. Okay, I'm trying to get a very important question for us here. For those already who have it, please try reading it a little bit. Try reading it. Try reading it. Great. Looks bad, but better than nothing. Great. So you can see, ladies and gentlemen, like now here, they told us in part A, and this is very popular, with reference to international public sector accounting standards, IPSAS, explain 4 benefits that would accrue to your country from adopting IPSAS. Describe 3 challenges your country could face in adopting accrual accounting practices. My concern is part B of this question, where they want us to give them a budget outturn for the Ministry of Finance, which in this case here is done in accordance with the dictates of IPSAS 24, which basically is the presentation of budget information in financial statements. You can't get a better examiner than this. Any examiner who tells you to put up a budget for your exam is never a serious examiner. He's a joker of an examiner, because here we have got some low-hanging fruits. Here we've got some low-hanging fruits that I'll be able to harvest really without sweating at all. The first lowest hanging fruit is to copy any budget the way it is. You simply copy that down. So could you kindly, I hope you guys have been able to take a photo of this. I hope you guys have been able to take a photo of this. I hope you've been able to take a photo of this, because I would want us to write down the budget the way the examiner has given us that budget. We write down the budget the way the examiner has given us that budget. It's here. So we have our budget. We have our budget here, right? And then we have our actual. So budget versus actual. So I can see receipts. So receipts, what do we have here under receipts? So under receipts, ladies and gentlemen, I can see revenue from taxes. Revenue from taxes. We have 600,000 here. And then we have 552,000 for the actual. And then we have borrowings, national government, from national government. So we intended to borrow 400,000, but we ended up borrowing 380,000. We could only get 380,000. From there, ladies and gentlemen, we have borrowings foreign. From out there, borrowings are foreign. We have 160,000, and then we have 320,000, like that. From there, we have grants, donations with conditions. So grants from the famous IMF and the World Bank. So we have 80,000, and then we have 100,000 there. Other agencies, grants from other agencies, 60,000, 64,000. Ladies and gentlemen, from there straight away, I'm looking at the payments. So under payments, what do we have? We made some payments through some education project. We had budgeted to pay 600,000, but we actually paid less, 536,000. Defense, perhaps we have some security project, 120,000. That was the budget, but we ended up paying 80,000. We ended up paying 80,000. Then we have a government, government planning costs for government transitions, like transition to county governments, 10,000 versus 15,000. Then we have a health project, 201,000 versus 120,000. From there, we have internal security, housing. We have housing. So housing, what do we have? 180 to 20,000. 180, 220,000. 180, 220,000. Right? From there, we have internal security. Internal security, perhaps defense was external against external aggression. Here we are now fighting the Mungikis and the other internal menaces. 240,000, 300,000. Then we have other payments. We have 160,000 versus 240,000. So you copy like that, already you have harvested some fruit. Doesn't matter whether that fruit is one that is overripe. So long as you have a fruit, you harvested it from down there. These are free marks. Free marks. Now remember the IPSAS 24 budget presentation, what they tell us is to come and create a column of variances. Create a column of variances and they basically tell us whether those variances are adverse or what are favorable. Adverse variances are those variances that eat onto our performance, that reduce our performance. Adverse. Favorable, increase our net worth. So what I don't know is whether you guys have been able to write up to here. Have you been able to write what I've written down? Have you been able to write what I've written down? B says yes. Who else is saying yes? 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 Thank you very much. So please come and now compare the budget versus the actuals. So budget versus the actuals. So we have 652. Look at this. For taxes, we expected to receive 600,000, but we got 552,000. Could you kindly give me that difference? The difference is what we are calling variance. The difference is what we are calling variance. So Samoy Dennis tells me 8,000. Is that okay? 8,000. So can somebody in this case here give us a shout? This 8,000, is it adverse or favorable? Is it adverse or is it a good variance or a bad variance? Is it a good variance or a bad variance? Good or bad variance? When he says bad. No, I'm not asking for the second one. 50 or 48,000. 48,000. 48,000. So is it a good variance or a bad variance? Good or bad? Good or bad? Why good? Because I'm seeing a problem. Had budgeted to get more. Had budgeted to get 600,000, but I fell behind my target. Imagine like you are KRA Somebody gives you a target of 3 million, and then you get 2 million. It cannot be good. This will be bad. This will be bad. So when it's an adverse variance, you write it as a negative because that means that your performance is being eaten. We are talking of revenue, remember. Let's come to the second one, revenue coming in. We had projected to borrow from the national government 48,000, but 400,000 it mean. But you only got 380,000. What is that difference? 400 and 380,000. What is that difference? 20K. So is it adverse or favorable? Bad again. Remember the adverse you're talking about is this one here, adverse. Adverse like that. So listen and listen and listen. For receipt items, when you are getting variance for receipt items, listen. When you are getting variance for receipt items, you normally take actual minus budget for proper interpretation. Whenever you are getting variances of receipt, you always take actual. You always work with what we call ARB. For receipts, always it's actual minus budget. So like now you take 552 minus this, you get minus 48,000. To avoid those interpretations, whenever, ladies and gentlemen, you are getting variances for what? Receipt items, what have we said? It's ARB. It is actual minus budget. So like now this 380,000 minus 400,000, I'll just write negative like that. How about the next one? 320 minus 160? 320 minus 160, it's positive, isn't it? It's positive. 160,000. So you don't write favorable. Here they don't want you to write like that, like management accounting. No, here favorable should be left as positive. Like now this is positive. I don't even need to interpret at all, because the more you try to interpret, the more confused you shall become. And if you become very confused in an exam situation, automatically you are throwing yourself under the bus. The bus in this case, they will even step on you as it goes towards Canaan. You not see Canaan. So don't really go into a lot of interpretations, no. So like now here, what I know, these are revenue item. Revenue item, it will be 100,000 minus, it's actual minus, it's AB. So 20,000 positive. Thank you very much. Please go to the next one. The next one, what do we have there? 4,000 like that. 4,000 like that. So then please come and give me the total here. Give me the total variance for the revenues. Total variance for the revenues. What do we have? Somebody minus 48 minus this plus this. 116,000. Is there anybody who is getting this? 116,000 positive like that. 116,000 positive like that. From there, ladies and gentlemen, now we go straight away to these payments. Look at education. Education, we expected to pay 600,000, but we ended up paying 536,000. Before we make any argument, could you kindly come here and give me the difference? This and this, kindly give me the difference. Right? Aldrin, give me the difference here. 64,000. So is it favorable or adverse? Is it favorable or adverse? But it's a payment. I'd thought I would pay more, but I paid less. So it's favorable, isn't it? But you see, the moment you go into those interpretations, I've taught this thing for so long, having taught AFR, which has got also this topic is in AFR. Trust you me, even at that senior level, still people don't like the interpretation. What they like is my shortcut, that for expenses, for payments, for purpose of interpretation, we always talk over BA. So it's supposed to be budget minus actual. To avoid those issues of interpretations, it's budget minus actual. So then we have here, this minus gives me positive 64,000. At times it's good to work like a fool. It pays dividends. So like now the next one will be 120 minus 80,000, which will give me what figure, somebody here? $40,000. So now we don't talk over. The examiner will be able to know when they see positive, they know it's favorable. That's not my business. So please go to government. So it's budget, it's budget minus actual. It's budget minus actual. Budget minus actual. So go and pick the next one. So the next one is the third one. This and this gives me minus 15,000, minus 5,000, sorry, minus 5,000, minus 5,000. The next one, somebody is giving me a figure of 0. Nope, nope, there's no 0 there. Nope. $81,000, Susie. 81,000. Negative, eh? Is it, why negative? Why negative, Samoy? Remember here, it's bar. It is 201 minus 120. It's this. Because when you go to the payments, you must revert. You must reverse. For revenue, it's AB, actual minus budget. But for payments, it is bar, budget minus actual. 81,000 positive. 81,000 positive. Go to the next one. How about housing? It is this. It will be minus something. It will be minus something. So minus 40,000. Minus 40,000. Go to the next one. Internal security. Internal security, what do we have there? Minus 60,000. Minus 60,000. And then you go to the last one. 160,000 minus 240,000 will end up giving us what figure, somebody there? Minus 80,000. So please give me the final total here for the payments. Give me the total final for the payments. Somebody says 0. Somebody is saying 0. 0. We want to get someone else confirming that 0 for sure is the correct position. 0. 0. Thank you. Thank you. Thank you very much. 0. Now from there, you want to get the total over return. The total over return, the total budget over return. So you need to come and give us a summary. You need to come and give us a summary. You need to come and give us a summary. You need to come and give us a summary. So give us a summary, give us a summary, give us a summary, give us a summary, summary of variances, summary of variances. So summary of variances, what do we have there? Summary of variances, what we have, ladies and gentlemen, is this. Summary of variances, we have the variances coming as a result of receipts. You give me 116,000. And then we have the variances as a result of payments, which gives us 0. And therefore the total overturn, budget overturn will be 116,000. What we'll need to do is now to call all the people who are in charge of this particular operation and even give them a bonus because the total overturn is positive. Means we saved quite a lot. We saved quite a lot. We saved quite a lot. So, ladies and gentlemen, that has been useful. That has been useful. Always, as you work on these things, remember our revision kit, which goes for just 1,000 bob. And that is the end of today's